Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Hello and welcome to this very special edition of Women's Wednesday, and today we'll be focusing on how women can actually use equity as an asset class to create long-term wealth, and also how can they understand market trends and invest smartly. I have with me Bharti Sawant, Fund Manager Equity from Mirae. Thank you so much for joining us today. And while we've been discussing a lot about basics in investments or basics of investments, and when you talk about equity as an asset class, you definitely cannot miss this opportunity to make money out of it. But then having said that, when we talk about long-term wealth creation, how can equity as an asset class, and that too, equity mutual funds as a vehicle, to invest in equity, how can that be helpful for women investors?
Thank you, Kavita, first of all, for having me here. And coming to the topic that we are here for women investing. So the first and foremost important thing is that women's participation in investments has been going up. We have seen investments getting directly into either direct investments thanks to the social media. It's helping to grow the awareness. But I think women's are still quite risk averse before taking any decisions, and hence we still see a lot of investments going into the traditional mediums, which is your gold or maybe FDs. These are the most common investing vehicles that they have been exposed to so far. Definitely so investing in equities itself is a big thing. And why mutual funds? So it helps you to overall plan your investments in a better way if you have a clear horizon. So somebody is looking to invest, say, from a 10-year perspective or a 15-year or a 20-year perspective.
That is important to have when you invest in equity, is it?
Yes. We need to, there are two most important things. Firstly, we need to set a goal, why we need to invest. And secondly is the time horizon. So supposedly if you want to buy a car or maybe a house, then you need to set a budget as to what kind of car or what's the cost that you need to, what's the corpus that you need to build in. And accordingly, then you need to identify what means will help you to achieve those things. So equity investments vis-a-vis compared to other investments helps you to achieve those goals faster. Historically, it has been proven that way. Secondly, it helps you to beat inflation, of course, and it makes you financially independent. Because savings is one thing and investments is different. Investments helps you create wealth, whereas savings is something which will just help you to just sail through the heyday. So that's my bit on why equity investments over the other investments, more so to create financial independence.
So when we are also investing for long term, there are different market trends that one might witness, different market movements also. As we all know, volatility is actually the nature of the market. So how can one actually understand the benefit of different market trends, and despite all of that, just continue their investments in a disciplined manner, maybe, having the goal aligned?
So see, it's like, first of all, we should not, if you're doing direct investment stock, first of all, we should not look at the markets regularly. That's one thing as a layman.
But then it's your hard-earned money. How do you not look at the markets?
So you need to be patient and you need to do a systematic investment.
Sure.
Okay. So in order to beat the volatility in the market, see, we cannot time the market. Nobody can time the market. Even the fund managers who are managing those funds, it's difficult to understand the volatility and time, ki bhai, this is the right time to buy any stock or enter the market. So just be more disciplined, do regular SIPs, so systematic investment plans. Always plan your investment ahead of your expenses and be more regular. That's because there would be times wherein a particular investment you would have made at a at an X value, whereas if because of market volatility you may get it at a lower values, which will help you to average it out. Plus over time, if you understand the power of compounding, so it helps you to achieve far higher returns. So if I just take an example, so if somebody has to say create a wealth of say 50 lakh rupees, just if you would have started say 20 years back, even a 5,000 rupee can help him build a corpus of 50 lakhs But if he's starting later, say 5 years late,
You'll have to pump in
so
more money then
yes.
for that. Okay. But then having said that, how do I also, place my bets as per market trends? Because that can also be a strategy for me. How do I make the most out of these market trends also? Fine, I get the fact that, doing your SIP, being disciplined and being aligned with your financial goals is very important. But there are different market movements. There are different themes that work in the market, like right now we are looking at consumption playing big. Can we strategize our investments in such a way where these kind of market trends are beneficial for our portfolio?
Yes, you can have as I said earlier, you can have a different balanced approach. Within equities also there are different.
Sorry, I'm just butting in because what happens is if you're already having a mutual fund, okay, for example, if you have a blue chip, you already exposed across sectors. Across sectors, blue chip companies. So for all the women investors, maybe who are just taking their first step towards their investment journey, want to make the most of these market trends, how can you also not be over diversified? Okay, you have a large cap, you have a large and mid cap, but you also have a thematic because this theme is working in the market, because that's what is happening. We are seeing the inflows also. The numbers are up there for everyone to know. So how do we make the most without having that fear of being over diversified or having an overexposure in any of these categories there?
So in order to avoid over diversification, probably you can having diversification and yet concentration into certain categories. And also in terms of, say, if you know that consumption is going to play out, because there would have been certain times like certain themes would not have worked, even if something like a tech boom. So there was a tech boom, but when the bubble burst, so it's always beneficial to be exposed to sectors, but not overly exposed.
Exactly. You should know the timing should be very right for that.
And that becomes difficult. So
that becomes difficult for one to,
the exposure to thematics should be relative. It should be there if you want to play the sector or play the theme, but it should be limited. You should not be overly exposed. So maybe it's difficult for me to put a number to it, because
diversified mutual fund will be good for you, because then you can't be tracking down each and every sector.
So see, it should be a balance of diversified fund, that is a generic equity fund, which could be large cap, mid cap or small cap depending upon the risk profile. Add some thematics to it depending upon whatever themes that you think ideally is good, because there are a lot of thematic funds available in the market.
Yeah, true.
Plus also add bit of debt, which will help you to balance the overall risk profile.
So just understand the theme also that you are playing out with, just keep a track of what's in trend and what's in news for that. And for everything, the basic crux is have a long-term investment horizon.
Do review your portfolios periodically. That is the most important thing.
Aspect.
Because you may
even
think
the fund performances,
Exactly. So when I say review the portfolio, it also depends on you also have to review the fund performance. That is the most important thing.
That is against the benchmark you should be doing. How should you compare the returns then?
So you should compare the most important
peer or peer to or fund to benchmark.
So first it should be to the benchmark and then to the peers.
Okay. All right. So we do have a lot more to talk on this, but then my time is up for this interaction. Thank you so much for being on the show today. That will be all. Thank you so much for watching.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.